Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hey, Apple shares a little bit lower in today's trade. This, as one of the world's largest market cap companies, as you know, took the rare step of cutting about 100 jobs. It happened in its digital services group. It's part of a shift in priorities for the critical division. At least that's according to people with knowledge of the matter.
Well, reporting this out, as he does all things Apple, back with us is Bloomberg News Chief Technology Correspondent Mark Gurman. He joins us from Los Angeles. Mark, when we talk about Apple, we talk about a company that, as of its latest filing, has about 100,000 employees around the world. A cut of 100 people, it's not huge, but as you write, it's pretty rare for Apple to do layoffs. What's going on?
100 in context of how big Apple is and in context of the size of the layoffs that some of Apple's peer group have done is very minimal. But layoffs at Apple, no matter how many people are involved, have an outsized influence, right? It's an outsized understanding of what's going on here. Apple simply does not do this. They've done it 4 times this year, 4 times, right? They've probably done 4 rounds of layoffs in the 20 years prior to this year.
Wow. So
this is notable. At the beginning of this year, you had 121 people at an AI Siri-related operations group in San Diego, California. The end of February, you had several hundred people across 2 projects that were shut down. One, the self-driving car initiative, the other, a micro LED project, right? And if you really look at it, both of those have to do with cost cutting. Even the San Diego one has some cost cutting involved there. The cut to the services division, which, by the way, is Apple's fastest growing and one of its most important organizations in the entire company, one that most people would probably believe would never face any layoffs, that is where the cuts happen. So about 100 jobs, mainly across Apple Books and Apple News. We're talking about engineers, we're talking about design, we're talking about software quality assurance and testing. These people worked across many different platforms within Apple services. Some of them probably touched the App Store. Some of them probably touched Apple Music and Apple TV to some extent. So that's 100 resources there. And if it wasn't purely a cost-cutting move, Apple probably could have relocated those people to other teams from the get-go. To be fair, they're getting 60 days notice here. They have 60 days to find another job within Apple. I would venture to guess that far fewer than half of the 100 people will find a new job within Apple in the next 2 months. So most of those people probably will be leaving the company in 60 days from yesterday when this was announced internally. So this is quite a big deal, although it is 100 people comparatively.
Yeah, and if you're one of those 100, it certainly doesn't feel like a small job cut. Having said that, Mark, why is it then happening? As you said, 4 times this year, this does not happen at this company. So why is it? It's a company that's got a very rich balance sheet. It's got lots of cash. What's going on?
So let me start with yesterday's cut. So Apple Books is not a big part of the overall pie of revenue for the Apple Services organization, right? It's probably one of their weaker services. They don't invest a ton in it. It's not a true moneymaker. Apple News doesn't make a ton of money either, even though there's advertising, even though there's that subscription, which I believe is now $13 a month. So it's simply less of a priority. So there's a bit of a priority shift in Apple services towards streaming video, streaming music, gaming, the App Store and such. Remember, there was that App Store reorganization a couple of weeks ago, which meant that they probably had to reallocate some resources related to that as well. Now, in terms of the layoffs in totality, I think it shows that, Apple is bracing for some sort of recession or trying to get ahead of the possibility of a recession. Wow. Obviously, we've seen stats out there, and Apple wants to be a leaner company, right? They're not able to spend extra few billion a year at this point, or they don't want to spend an extra few billion a year at this point on bets like the self-driving car, like the micro LED project that they believe there's a strong chance will never come to fruition. right? Apple can continue to spend $1 billion a year on each of those projects, rack up a bill of an extra 10 billion over the next 5 years and get absolutely nowhere. But they decided to save that 10 billion and probably reinvest it into bigger priorities like generative AI. They're working on the tabletop robotics project that I've reported on. They're working on a new iPad that's going to require a lot of R&D. This is a 19-inch iPad that can fold in half. They need to do some R&D to redesign the iPhone. They need to put money into shrinking down their components and making them more efficient so they can roll out new form factors. There are some health technologies that they want to roll out. But, the big picture here is AI and probably reinvesting that money into artificial intelligence development.
Mark, Apple as a lean company, I didn't think I'd hear you say that. Yeah. How would you describe Apple? How would you characterize Apple in terms of it being a quote unquote lean company?
I watched this great interview with Luca Maestri, the outgoing CFO, earlier this week. And he said that he runs the company with about 10% in his finance office of the amount of people he had while he was a CFO at other public companies prior. Wow. Even though Apple's market cap is 10 times the size, if not more, than those companies. Right. He worked at Xerox. He worked at General Motors, a few other companies before Apple. And those are big companies internationally, right? They're global titans as well. He gave this example. So he said his investor relations group has 2 people. He says that Apple's hedge fund, that's Brayburn Capital out of Nevada. They manage Apple's cash, right? Several $100 billion. He says that's 7 people, right? Wow. And so I think those are some good examples of how lean they run. In terms of their R&D budget, over the past few years, I've seen the overall company-wide R&D budget either stay stagnant or grow less than 5% on an annual basis. And if you compare that to the R&D budget growth of companies like Meta and Google and Microsoft, it's slim, right? Apple knows that the iPhone and some of their other products and services are going to continue to print a lot of cash and a lot of money, right? They don't want to upset the status quo and risk doing something that is going to put the company in a bad position. Now, what I will tell you is Apple has an issue here where they're not really reinventing themselves. They're not really moving the needle. They are very far behind in artificial intelligence, robotics, and some other areas. And there is a lot of catch up to do. They have become too reliant on this annual September formula of new iPhones, Apple Watches, and AirPods. It does great for the stock. It makes shareholders happy. There's not a lot of needle moving there. And so I believe the company needs to take more risk. And so I guess the hope as a consumer and someone who watches the company, and maybe the hope for employee morale of the people who are still there, is that this amount of money could be reinvested in other areas that will allow Apple to pursue new growth opportunities and create some really cool products. When was the last time you waited in line for an Apple product and when you got your hands on that device for the first time, you were amazed? I have never seen anything like this before. I can give you a few examples. There was the iPad Air in 2013. There was the first Retina iPad the year before that. The iPhone 4 with that first Retina display and that glass back and front design with the aluminum band around the edges. That was pretty incredible. But it's been a while. Maybe the 2018 iPad Pro, maybe the original Apple Watch, maybe the AirPods. But it has been a serious number of years since the last time I feel like they came out with something that was really earth-shattering. And I think COVID played a part in it, right? Across the pandemic or the height of the pandemic, Apple was able to churn out products still at an amazing pace. They were able to get out the iPhone 12 with 5G only with about a month and a half delay, right in the height of COVID. That is crazy that they were able to do that. And that was a major accomplishment. But what people don't realize is how many years of R&D, how many years of Apple working on these new types of form factors and products and software and services that they normally be doing during COVID, how much of that was just pushed to the wayside in order to prioritize the products they had to get out, right? And everything else going on with the pandemic, people working from home versus the office. So there's a bit of a delay there, and I think it's going to take a few more years for them to catch up.
All right. And for me, I think it was when I got my Apple Watch, which was the second version. And I don't even have it on right now. I mean, I haven't done an upgrade.
She still has the second version of the Apple Watch.
Yeah. Anti-collectors.
You'll get some new ones in a few weeks.
Hey, listen, you mentioned the CFO, that you listened to that conversation about being lean and how he ran his office and his team. He is stepping down from the job at the end of the year. It sounds like he's not leaving the company. Are they getting ready in terms of a younger C-suite thinking about the company moving forward?
Been writing a lot about this, and my latest point of view, and you can read my Power On column this weekend on Sunday, Bloomberg.com, to get more insight on this. But they've come up with a new formula to succession here, right? Do everything you can to make sure the old guard, Tim Cook's most trusted lieutenants, don't really leave the building. The last, four major executive departures, they didn't let them leave. Well, I mean, they didn't, handcuff them to their office or anything like that, right? But they gave them enough money and enough of a business card and responsibility to stay. Phil Schiller is not marketing chief anymore. He runs the App Store. Dan Riccio is not hardware engineering chief. He runs the Vision Pro. Now you have Luca Maestri, who's no longer CFO, and he's going to run IS&T, which, by the way, is probably the most controversial and boring division in the entire company. So, you can see what they're doing here. They're trying to keep the band together as long as possible, because I don't think I think they're a little afraid of evolving and reinvention and risk taking, given that you don't want to upset something that is working so well, but you also have to at the same time balance, long-term management of the company. And so that's really the succession story there. Kevin Parrick, he basically came to Apple alongside Luca Maestri in 2013 or so. Parrick joined the company. He's been the heir apparent. Apple has been signaling this CFO transition for months now. I wrote about it earlier this year. They have been showing off Parrick, so to speak, to financial institutions, investors, financial analysts, and the like. They've been talking him up externally and internally. He has been really shadowing Luca. Has been involved in every CFO-related meeting over the last year or so. They've been preparing for this. It was down to two candidates at the end of last year, so Kevin Parrick and Ciara Casey. When Casey apparently found out that she wasn't going to be the replacement, she left. I think that was at least a component of her leaving Apple. At the beginning of this year, she became the CFO of Sonos. So it seems clear that she wanted a public company CFO role, and Sonos is a great brand despite the issues they've been facing lately.
Yeah, we could do a whole segment on those app issues, Mark. We have 20
Maybe
seconds.
two.
Yeah, we have 20 seconds left. Very briefly, what about filling Tim Cook's shoes? 20 seconds.
I wrote earlier this year, my belief is that John Turnus, the senior VP of hardware engineering, he's still not 50. Tim Cook stays around another 3 to 5 years. Turnus is the only one that would have a long runway as CEO. And Apple's board can make a strong argument about getting a hardware person back in those shoes.
All right, around the world in Apple in about 7, 8 minutes, 9 minutes? You did it, as you always do. Mark Gurman, thank you. He is Bloomberg News Chief Technology Correspondent. Mark Gurman.
Apple's hedge fund, Brayburn. It's a type of apple.
Lean apple. That's like sticking with me.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's get a view of the private markets.
Yep, that's because NFL owners voted to allow private equity firms to buy stakes in their franchises, a move expected to attract billions in fresh capital while boosting team valuations that had already been surging.
Yeah, during a special one-day league meeting in Minneapolis, the group loosened some of the strictest ownership rules in professional sports to allow private equity to own as much as 10% of a team. That's according to the NFL.
You know who was there?
Randall Williams was there, and he's fresh off a plane from Minneapolis.
Well, fresh.
We've all been there.
We have been there.
You
It's
land,
not
you,
easy.
you
It's
come
not
right
easy.
into the office. Yeah,
Absolutely. Thank you all for having me.
Yeah, thanks so much for joining us. Randall's Bloomberg News U.S. sports business reporter. He's the perfect guy to have on talking about this. When this broke yesterday, we read your story on air, Randall. It's a red headline, a big deal.
Yep.
I was being a little cynical
Okay.
in my analysis of this. I was like, a bunch of folks get together who own assets that are worth a lot of money, and they vote to open up to allow them to become worth more. Am I looking at this incorrectly?
I think there's an argument for both. There are a lot of private equity pros in the NFL, but they're invested individually, and the NFL has limited the role that they can play as individuals in investing through funds. So I think they've structured it in a way so that it isn't unfair, or it isn't unfair for some of these NFL owners. I think they did a pretty good job.
But doesn't it, by bringing in a new group of investors, just automatically the demand, won't it
sure.
increase the value of these teams? So those
For sure.
existing NFL owners are like, yeah, come on, right?
1,000%. I mean, there is an expectation that a couple of these deals will happen before the end of the year. I've had NFL executives and in their building, their HQ, and NFL team executives say they expect these deals to go fast and furious.
Because an NFL team is so expensive that there are only a handful of individuals or
Only
families.
32 of them, and technically 31, really.
And if you think about who can actually afford to buy a new one, or to buy a team that goes up for sale,
Yeah.
there's a small number of people
Right.
because these are so expensive. So if now you're allowed to sell 10% to private equity, you're opening up the available pool of purchases to so many more people. Doesn't that just automatically increase the value?
For sure, but there's only 4 groups: Arctos, Ares, Sixth Street, and a consortium that consists of Dynasty, and Curtis Martin led this other group. It's Dynasty. It is, I'll have to pull up the names.
It's fine. He's off of
Dynasty, CVC, Blackstone, and
There
Carlyle
we go.
all together at the same time. And so those 4 will get the first right. And then eventually they may open it up to more firms, but they'll have to be pre-approved, and the NFL will do its due diligence there.
What's the due diligence? Like, it's kind of, it sounds like accredited investors. You know, you can,
Well,
you
first
can
of all, you have to have
invest.
the money. You have to have the money. If you don't have the money, there's no way. So I think it starts with the funds. And then I think it depends on how you're going to invest. One of the things that the NFL CFO was saying was that each of these funds have a different strategy for how they're investing in sports teams. And so that for a team perspective, what you're going to expect is a team may not want to do a deal with one fund. They may want to do something with somebody else. So they have enough capital for them to have a wide variety of choices.
How much say will private equity investors, though, have in the
Zero.
team? How do you know that? I mean, if you're anteing up, I mean, what are the limitations on how much a private equity firm can put in a team? Is there a limitation?
10%.
10%.
10%. So
10%
the
ownership.
reason that this is happening is because when Josh Harris raised money last year, he had, I would say, significant difficulty doing it. It was a $6 billion team, and he has to put up a lot of money by himself. I believe his ownership group is 20 plus. The cap for an ownership group is 25. That raised concerns. If you have private equity who can offer 10%, let's say an average NFL valuation by Sportico is $5.93 billion. That's $500 million right away. They have to hold the team for 6 years. So then you have a little bit more leeway.
Other leagues having done this, what have we learned?
Well, the NBA, MLS, all of the other leagues allow this. The NFL's rules are the strictest. They also have the highest valuations. The NBA's are the most expansive. The Arctos specifically is a pioneer in this private equity sports space. I expect them to be one of the first just because they've been the most active.
Hey, what was this meeting like? You were there. Take us into
they're,
it. Were you actually? Did you actually get to go into the meeting?
Oh, of course not. Of course not. But a lot of the NFL owners meetings are watching the owners come in, saying, hi, hello, how you doing? Watching the NFL's employees come in, hi, hello, how you doing? And then they go, they'll walk past, they'll speak. And when it's meeting time, it's meeting time. You don't hear anything unless you have sources like the really, really good reporters. And then you sit and wait. You wait to hear what happens. You get to ask questions to Roger Goodell. Jerry Jones is always going to talk to you. He's a fun guy. But it's quite the interesting meeting because I'll say at the March and May League meetings, it's a lot more free-flowing. Owners bring their families. Coaches bring their families. They're more relaxed. They're happy to talk to you in the season. Absolutely not. It's competition time.
In your story, though, you say the move to allow private equity into ownership has the potential to shift how teams are run. Limited ownership partners have traditionally been friends, former players, and local celebrities.
Absolutely.
I mean, this definitely does change the dynamics. We'll find out, I guess, over time what that actually means, but it's going to be different.
It's going to be different. There's an example in the story where I talk about how the Atlanta Falcons welcomed some new limited partners, but they won't be able to sell to private equity. The only people that can sell are family limited partners and controlling owners. So if you just happen to have a piece of the team, but you are not a member of the family that owns the team, you're out of luck. But if you own a piece of the team and you're a member of the family, it's a good time for you.
So we'll still have family ownership.
Of course.
That's going to be still
you got to
the main
protect the
model.
family ownership.
That's really that's kind of interesting.
Yeah, but the family ownership will get diluted a little bit.
Technically,
in some of these cases,
it depends.
right?
It depends on the relationship within the families. So if you have a sibling that you don't get along with and they want out, this is an opportunity for them to get out.
So it's also an opportunity for some of these families to cash in on an asset that has increased in value quite a bit.
Absolutely. I mean, there are some, as you said, these are family-run businesses. But
Right.
if your money is all tied in the family, you might not have unlimited cash flow to be able to spend on the things you want to spend on. This liquidity is an option for that. And then there's a stadium part of it. Some of these NFL
Yeah.
owners and teams want to host a Super Bowl. They want to host an NFL draft, an NFL combine. Without a stadium or facility that can show off, that can really be a state-of-the-art arena, it's not going to happen. So if you have private equity coming in paying for some of these renovations or new stadiums, it helps.
10 seconds. So the next thing you watch now is for the deals to start happening.
Of course. The green light is officially lit.
Maybe get some sleep too if you
I'm going to try.
He's got a lot of work ahead of him.
got a lot of work.
It's just getting
doing
started.
a lot of work on this.
Thank you all for having me.
Thank you. Randall Williams, Bloomberg News U.S. sports business reporter. Check out all his work at the Bloomberg Terminal and, of course, at Bloomberg.com.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Many kids across the country are already back in school after summer break. Can you believe that?
That is crazy.
Yeah.
Like, I don't know. I can feel it, though. And like, the city's winding down. And
The
getting
city's
ready
winding
for-
down. We do it a little differently
We
here
do.
in New York.
Yeah.
We
Start later?
Start later,
After
yeah.
Labor Day?
After Labor
Didn't
Day.
you
New
grow up-
Jersey, too.
Wait, California, did you grow up that way?
I don't even remember.
Okay.
We didn't.
We were after Labor Day.
Were you? Well, yeah, New Jersey's the same
Yeah,
way.
yeah,
Yeah.
exactly.
Many of the kids, when they go back to school, or maybe they're back in school, they'll take language classes. Maybe they'll learn Spanish, Mandarin, French, or they'll do what I did.
What's that? Nothing?
Take Latin.
Ah.
Yeah.
My
Not the
daughter's-
most practical of languages when it comes to
Great
world
if you
travel.
want to go to medieval times or something.
That's pretty good.
Just saying.
Well, you don't have to be in school to learn a new language. There's no shortage of apps and services out there to help you do that. Duolingo, Rosetta Stone, Memrise, and more, such as Babbel. Back with us is Julie Hansen, U.S. CEO of Babbel. She joins us from New York. Julie, good to have you with us. Happy almost September, back to school. I mentioned a few names there, some of them publicly traded, including Duolingo. How do you differentiate, given that when you Google language learning apps, there's like 5 up there that are just sponsored results. There's a lot of competition in your space. How do you do it?
There is. Hola, Tim and Carol. Thanks for having me.
Hello.
It is a competitive space, but I think there really are 2 big players in the market, and Babbel is one of them. Our differentiation is all about our pedagogy, if I can use that term, or the kind of the way we approach the learning, the seriousness of it, and the effectiveness of it. We have studies that have shown that Babbel is more effective than others in actually learning a language. But a lot comes down to also your personal style, the way you learn. Everyone learns differently. So we try to make sure we reflect all the different ways of learning in the app: writing, reading, speaking, of course, the most important.
Hey, how do you measure success? Because I think we talked with you, wasn't it around like the new year? And we talked about how people in the new year sometimes are like, I want to learn to do this or that. I want to lose weight. I want to learn a language. So I am curious, how do you guys measure success that people actually have learned the language and can converse and are fluent even?
Yeah, that is a great question, and I can assure you we spend so much time on that topic. There's really 2 main ways to think about it. One is against the CFR, the Common European Frame of Reference, which is kind of a formal way of evaluating language abilities. And that's very common in Europe. Everyone knows it, but even here in the US, that framework is understood and used in some circles. And so we measure people's advancement against it. But at the same time, the most important thing and what we're trying to do in Babbel, because we know we'll never make you fluent. No app will make you fluent. So we're trying to help you get comfortable having a conversation. So we actually ask our users to evaluate subjectively, personally, their view of their progress. And that's for us, their own personal learner success rating is our number one way of looking at it, because at the end of the day, if you're a B1 on the CFR scale, but you can't speak, then are you really making the progress you want? Or if you're a sloppy A something, but you're getting out there and making conversation, like that's really more success in many ways.
Julie,
so those 2 ways.
You said that no app will make you fluent, but can developments with AI and perhaps maybe a conversation partner that is a bot eventually make you fluent? Like, do you think that no app will ever make you fluent, or are we on a sort of pace to get to that at some point in the near future?
Well, fluent is a very high bar. Fluent is, live there, speak it. Like for me,
Dream in that language, right?
Yeah.
That's what they always say.
Exactly, exactly. And when I got to that point in college, when I dreamt in French, like it was incredibly thrilling. It's long gone, by the way.
I know a place where you can work on it.
We completely agree with you that a chatbot can serve that purpose. In fact, in our US product, where for English speakers learning Spanish, we have rolled that out already, and people are very engaged with it. It doesn't judge you. I mean, it gives you feedback, but you're not embarrassed in front of the AI. It's very effective. We didn't, by the way, just throw an LLM in the app and say, have at it. Like we had a kind of an expert train it for a considerable period of time, and that's what makes it successful. But absolutely, that is going to help more and more.
What's the demographics? Is it a lot of people, maybe younger, starting jobs, or what is it? Is there some kind of, I'm always curious about like the folks using your platform.
It is a mix, honestly. It's not school kids. We are not aimed at that market for various reasons. In many ways, our best users are older, over, call it 45, because they have time. They have time in their lives to pursue this, but it's really all ages and people, starting from 18 and up. So remember that in the US, in grade school, only 20% of students ever take a language. By the way, the state with the highest percentage of kids taking a second language in public high school is New Jersey. So well done there.
Yeah.
What did you
Even
learn?
that
What did
is
you learn,
just
Carol?
over
I
50.
took a lot of Spanish. I probably took maybe 10 years, starting in 5th grade.
So you will do the interview in Spanish.
Muy bien, sí. So, por supuesto.
Can we try French? I'm a little better at that.
But I also think, it's interesting. I have a daughter who, when she was younger, she was learning Chinese. Then she learned French, and Latin. She did really well. I think there are people that can just take to learning a language pretty quickly. I mean, I've traveled with her overseas, and she can converse and understand. And I feel like I can do that a little bit when I've been in some Spanish-speaking countries. But it's just interesting. I do think there are people who have a knack for learning it. Is that a fair thing to say?
No question.
Okay.
I mean, we believe anyone can learn a language, but there's no question that some people take to it more instantly. And aren't we all better at the things we enjoy? I think it kind of lines up pretty closely there.
I'm thinking about what you've talked
Do you
to
have
us.
a language? Or you said
Yeah,
Latin?
I took Spanish. Well, Latin was what I took in high school, and then when I got into college, there's this very strange program. They said, this is true.
Or you'd go overseas,
I had to go
right?
overseas for my first semester freshman year. So I frantically worked on Spanish, but I'll tell you what, Julie, it didn't stick for me until I got there and moved in with a family that only spoke Spanish, and I had to be speaking in Spanish completely immersed. I mean, there's no substitute for that, Julie, as you mentioned.
100%. This summer, our family went on a vacation in France, and I went back to the town in which I was an au pair back in college. Cool. And I was reminded, kids are the best language teachers. A, their vocabulary is a little simpler, but B, they have no mercy. So that's just really a great way to learn.
So I am curious about, I always think about someone who's listening. So to start, you just dive in, right? You just start from the beginning and just start going with it. Don't get discouraged. Like, what is your advice for someone who's learning a language, a second language, or first language?
Yeah, that's exactly right. Everything you said, just start, and also be consistent. Binge learners, those people who do an hour one day and then nothing for the next 6, you're not going to learn as fast. You're not going to retain it as well as if you do 10, 15 minutes every day. And we've shortened our lessons over time so that, hey, if you've got 5 minutes, that works too. So absolutely, it's the repetition, but just start and have fun with it. And also, the more ways you can learn, the better. You use the app, but also watch a movie in your target language or have a conversation if you can, or all of those things cumulatively are the best way.
Or go to France.
Or go to
just
France.
hang out there.
Order some wine,
be an au pair in
croissant.
France. Yeah. Go back in time and do that. Sounds pretty good. Julie Hansen, always good to check in with you. Thanks so much for joining us. Happy end of summer. Happy Labor Day. Julie is U.S. CEO of Babbel, joining us from New York.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got about 18 minutes left in today's trading session, and then add another 20 minutes on top of that, and then we'll get NVIDIA earnings. I'm just trying to put it all together.
This
for you.
is your Super Bowl.
So roughly 40 minutes.
More or less.
That could change narrative,
38
tone,
minutes.
sentiment,
If the countdown is on.
if the countdown is on.
And as a
It is
reminder,
on.
we are going all in on NVIDIA in our 4 o'clock Wall Street time hour.
As we should,
Yeah.
like we talk about, it's
As
been
we
kind
should.
of, it's been kind of quiet. We keep, ticking off things.
Yeah.
Our next guest has some thoughts on NVIDIA.
Yeah, Jeff McClean, managing partner at Solidarity Capital, is with us, joining us from Utah. Jeff, happy NVIDIA earnings day. How are you?
I'm doing great. Everyone's edge of their seat over here for the big day.
Yeah, what are you guys doing to celebrate?
Popping open some Dr. Peppers, and just waiting to hear Jensen preach the good word.
Okay, well, let's talk a little bit about that. The doctor is in. That would be Dr. Pepper, not that's the doctor. What do you think about NVIDIA?
Look, I mean, they are a massive driver to the economy and to the market right now. And I don't think there's a single company that's more tied to how the S&P is going to do tomorrow than NVIDIA. And so I think they're going to come out really strong today. The question for NVIDIA long-term is, how do they keep it up? I mean, the numbers are just astronomical at a company their size to continue to set the standard on beating earnings by insane amounts and growing at this incredible pace. How do they keep it up is really the big question long-term. And does someone try to steal their lunch? Like, does someone come in and what are their threats? That's the big question. But I think today is going to be a big day for them.
All right. So this is obviously a company that's on your radar. Do you suggest to your clients, to investors, to own it? Do you own it?
Great question. And so we like it if you're already in it. If you got in early, NVIDIA is a great spot. If you're trying to buy in now at this price point of where they're at, we're a no on new money going into NVIDIA simply from a valuation perspective. I mean, their valuation numbers are off the charts when you really dial in and look at it. I mean, they're trading at 40 times revenue. That's a big number and hard to swallow. And so as you look to hopefully, I think it's a great company if they stub their foot and you can get it down a good valuation by emotional trading in the market, great. But from new money going in, it's a tough one to say yes to.
But you're not willing to sell yet.
No, if you're in, now this is actually a great question because guess who is selling? Jensen's selling.
Yeah.
And he sold like $500 million in the past month and a half.
A tiny fraction of what he owns.
That's interesting. But
right.
He owns so much.
Yeah.
He's worth so much. Maybe he wants to buy a yacht. I don't know. But that's an interesting data point to say the least.
Or some new leather jackets.
I don't know.
I don't know.
He sounds like he works a lot.
Yeah, listen, I get it. And you're right. When it's such a big part of your portfolio, how many times do we talk to folks like yourself or other money managers who say, don't have all your eggs in one basket, even if you own
what
the company.
What if all those eggs? Hey, you know who you can't say that to is someone like Steve Ballmer. Seriously, because he did leave all his eggs in one basket.
Yeah.
And it worked out well.
Yeah.
And Bill Gates didn't.
Well,
Bill Gates diversified. And he moved away from Microsoft. And if he would have held on to Microsoft, he would be wealthier.
Like, I know he's having such a tough time right now.
I know.
All right. A little sarcasm there. But no, having said that, though, is there something like Jensen Huang, though, because of his connection with this company, that when he is the ultimate insider that he is selling, does it potentially, though, send a message even a little bit?
Yeah, for some people. I mean, I don't put a lot of weight into this specific instance, one, because he owns so much of it, but also two, I mean, we know he's grinding. I mean, he's given all these talks about suffering and wishing suffering upon Stanford students so they could learn things in life. He's put on a long track record. We have zero concerns around Jensen and his activity here, but it is an interesting data point of, is it at a momentary kind of top where he's taking advantage of it? Mm-hmm. That's something to keep in mind as for anyone who's not in NVIDIA right now and thinking about getting in. It's an interesting data point of if now is the right time to get in. I would hesitate on that point.
You make the point of that there are several customers that make up a good portion of revenue. Alphabet, Meta, Microsoft, Supermicro is a big customer.
Yeah.
I'm going to talk a little about Supermicro and my decliners, just a deep tease there.
It's been a rough couple of days.
Is there concern, though, as our own Ian King pointed out, or our Chip King here at Bloomberg, that with a big portion of CapEx being spent individually by these companies, there's not so much room for growth from these companies, and and NVIDIA has to diversify? Where do they diversify their revenue?
Yeah, and that's the catch, is that these it's not just a small amount. I mean, Microsoft alone almost accounts for 20% of their revenue at NVIDIA. That's such a huge number that not only do they need to diversify, I think the bigger risk to them is Microsoft saying, why don't we do this ourselves? We have the CapEx, we can easily acquire the talent. Why not do it ourselves? And so NVIDIA is going to have to expand the scope of who they're going after, but it's going to take a whole lot of companies, as you might imagine, to make up for a Microsoft, is around 20%. You have Meta around 10%, Alphabet 7% of NVIDIA's revenue. Those are big numbers. And with what comes with that concentration risk is if you stub your toe, or if Microsoft or Meta wakes up tomorrow and says, forget you, NVIDIA, we're going to do this ourselves, we're going to build our own stuff, that becomes a problem. Now, how they stay ahead of that is they continue to iterate with Blackwell and other type of the next gen stuff that they're working on. That's obviously going to be hugely important. And that's really what I think everyone's waiting for Jensen to talk about today. Where are they at with the next gen stuff? And what does that look like from a timeline perspective?
Hey, everybody, I do want to mention a headline crossing the Bloomberg terminal, and that is the Telegram CEO has been charged in France for alleged criminal use of the app, his app. You might recall over the weekend, Pavel Durov, the CEO of Telegram, was arrested outside of Paris. Authorities allege that he's Russian-born, he's a billionaire. He founded the service back in 2013, that he had failed to fight crime committed on the app by its users, including the spread of child sexual abuse materials. So there's been some concern with his arrest about free speech in terms of social media and media, but nonetheless, the Telegram CEO has been charged in France for the alleged criminal use of his app.
Okay, Jeff, we only have about 30 seconds left with you, but we got to get your thoughts on Nike very briefly. It's not just NVIDIA out there. What's going on with Nike for you?
Nike is violating the maxim of Warren Buffett around a ham sandwich should run a successful company, could run it someday. And the CEO is failing. I mean, it is an incredible marquee brand. I can't tell you how many Nike shoes I have in my closet, but according to my wife, too many. And so it's an incredible company, and he's tanking it. They have to make a change. Bill Ackman got involved with Nike, and I hope he makes the move. I'm a big Nike fan from a long-term investor perspective. I think it has a massive moat around its business, but they have a management consultant guy screwing it up, and they need a product guy in there.
All right, interesting stuff. Your perspective. Nike shares down about 24% year to date. Jeff McClean, managing partner over at Solidarity Capital, joining us.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.